At the onset of the pandemic, an unexpected economic phenomenon occurred. Americans collectively saved trillions of dollars. It was a surprise, a startling shift from the usual spending habits that characterize our consumer-driven society. But in the face of uncertainty, people across the nation suddenly found themselves holding tightly to their purse strings. As businesses shuttered and the world retreated indoors, discretionary spending plummeted. No more dining out, no more trips to the cinema, no more vacations. Suddenly, a significant portion of our everyday expenses disappeared. Simultaneously, the government's stimulus checks and unemployment benefits began to flow, padding out bank accounts, even as income sources dwindled for many. This combination of reduced spending and increased government aid led to a surge in savings. Money that would have otherwise been spent on meals out, on trips to the mall, on vacations abroad, started piling up in bank accounts. It was like a dam had been built, holding back the usual flow of cash from income to expenditure, resulting in a reservoir of savings that grew deeper and wider with each passing month. But this wasn't a uniform phenomenon. While some were saving more, others were struggling, their savings drained by job loss or reduced income. The pandemic widened the wealth gap, and the surge in savings was largely driven by those in higher income brackets who could afford to save. So what happened to these trillions in surplus savings? Some of it was put towards paying down debts. Credit card balances saw a significant decline during this period. Some of it was invested as people turned to the stock market in a bid to grow their wealth. And some of it, well, it just sat there, a safety net in uncertain times. With the pandemic's onset, Americans started saving more than ever. But where is all this money going? As we move forward, the fate of these savings will play a crucial role in shaping our post-pandemic economy. But with the specter of inflation looming, these savings are under threat. We'll explore this more in the next section. Stay tuned. As we delve deeper, we confront the silent thief that's eating away at these savings: high inflation. Imagine you have a $100 bill. Today it's enough to buy you a nice dinner for two, but fast forward a year, with inflation at an elevated level, and that same $100 might only cover a quick bite. That's inflation for you, subtly but surely diminishing the value of your money. Now let's paint a broader picture. Think back to the excess savings we've accumulated during the pandemic. Trillions of dollars, remember? Now, factor in inflation. Suddenly, those trillions aren't quite as impressive. You see, inflation erodes the purchasing power of money over time. So what once could buy you a palace might now only get you a small condo. The current inflation situation in the United States is particularly concerning. Over the past year, we've seen inflation rates rise to levels not witnessed in decades. The reasons are manifold, from supply chain disruptions to increased government spending. The result? More expensive goods and services, from groceries to gasoline. This inflationary environment is like a double-edged sword for your savings. On one hand, it potentially increases the return on your investments as businesses raise their prices. But on the other, it chips away at the value of the money you've set aside. And if your savings aren't growing at a rate that outpaces inflation, you're effectively losing money. So where does this leave us? Well, it's not all doom and gloom. While we can't control inflation, we can adapt our strategies to cope with it. This might mean investing in assets that tend to do well during inflationary periods, like real estate or stocks. Or it could involve adjusting our spending habits to offset rising costs. High inflation is quietly eroding the surplus savings. What does this mean for the future? It's a wake-up call, really. A reminder that saving money is not just about stashing away every spare dollar, but also about understanding and navigating the financial landscape. It's about making our money work for us, even in the face of challenges like high inflation. So, as we move forward, let's keep this in mind and arm ourselves with the knowledge to make smart, informed decisions about our finances. Despite the dwindling savings, robust consumer spending remains a strong economic force. It's a river, ever flowing, powering the economic engine. One hand holds the threat of high inflation eroding our savings, the other a surge of consumer spending that keeps the economy alive. What's the fuel? Several factors play a role. Some are returning to pre-pandemic routines, others are indulging in revenge spending. There are those investing in hobbies or home improvements, enjoying more time at home. Consumer spending's impact on the economy is significant, accounting for nearly 70% of the US economy. It's the fuel that keeps the economy running. As savings dwindle, this spending helps keep the economy afloat. But as an individual, it's crucial to consider your financial future. Here we face the challenge of balancing spending with saving. It's like tightrope walking, with the urge to spend on one side and the necessity to save on the other. How are Americans managing this balance? It's not easy. Some cut back on discretionary spending to save. Others focus on paying down debt to free up funds for future savings. Invest in stocks or real estate hoping to grow their wealth. But it all boils down to making informed decisions, understanding the trade-offs between spending and saving, and aligning choices with financial goals. So remember this: finding the balance between spending and saving is delicate and requires strategic planning. How are Americans managing it? That's a story for another day. But for now, let's remember that every dollar spent is a dollar that could have been saved, and every dollar saved is a dollar that could have been spent. The key is finding the right balance for you. As we navigate these economic challenges, what does the road look like? To thrive in this period of economic uncertainty, a financial plan is crucial. This plan should set a budget for immediate needs and future aspirations. Never overlook a rainy day fund. It is a safety net for unexpected expenses. Also, consider investing in diverse sectors like stocks, real estate, or bonds to insulate yourself against inflation. Despite hard times, Americans have saved more than expected before the pandemic. This surplus isn't idle. It signals potential for investment, supporting small businesses, and economic fortification. Yet, it also means a responsibility to make wise financial decisions. To make these decisions, delineate clear financial goals, educate yourself on personal finance and economic trends, and seek expert guidance when needed. Remember, you're not alone in this. The trillions in surplus savings demonstrate our adaptability and resilience, and they also represent an opportunity. By making wise financial decisions, we can use these savings to not only protect our financial future, but contribute to a stronger economy. Despite the challenges, Americans still hold trillions in surplus savings. With smart choices, we can safeguard our financial future. Before we wrap up today's episode on the Great American Savings Challenge, let's quickly highlight our key takeaways. The pandemic's financial impact underscored the importance of savings. Inflation erodes our savings, but intelligent financial planning can combat it. The consumer spending versus saving dilemma is real, but achievable financial goals can balance both. If you're unsure, seek help. Numerous resources are available to guide you. Our collective surplus savings are a testament to resilience and adaptability. Utilize this opportunity to ensure a secure financial future, contributing to a robust economy. That's all for today's episode on the Great American Savings Challenge. Remember to subscribe and hit the bell icon for more financial insights. Thank you for watching, and see you in the next episode.